So let's conclude the question we're looking at last class, capital allowance. Hope you guys still have the solution. So can someone open the question for us and let's complete. So in that question, there was a disposal of fixed assets. And I think we just completed the question without taking cognizance of the disposal. So we need to check that now. So in the last year where they disposed the assets, in the year of disposal, in the year of disposal, number one, there will not, there will not be, not, this English is not correct. Capital allowance cannot be claimed. So in the year of disposal, they cannot claim capital allowance because the asset has been disposed. Number two, your tax residual value will be equal to your disposal. Okay, so those are the two conditions in the year where an asset is disposed. Your tax residual value will be equal to your disposal, and you cannot claim capital allowance in that year. So that is the principle behind that. So in that last one that I did for you, I can't possibly see it now. Let me see if I can find it. Okay. I can't possibly see it, but in that question, I did not take cognizance of the fact that an asset was disposed. So we need to take cognizance of that. So now I'm supposed to look at balancing charge / allowance. We should look at balancing charge or allowance in that question. So I want to look at what we stopped in the last class. Okay, someone has shared it. So go to the solution we had last week. One of these assets was disposed. Let's go. If you have the solution we have last week, you will see it there. Did we see anyone? Yes. They disposed office furniture and production plants. Office furniture and production plants was disposed. So if you go back to you see how the solution to the question with you now. So that means in the year of disposal for office furniture, we have 1 million. Sorry, we have office furniture. We have as our tax residual value now. We are supposed to have 8250 because in the year of disposal, just like I've explained to you, your tax residual value will be equal to your disposal value, right? So instead of calculating annual allowance on that year, you will not calculate annual allowance because asset has been disposed. You remember one of the conditions I told you about capital allowance is that for capital allowance, the allowance will be granted all through the useful life of the assets. No temporary disuse. That is, if they dispose the assets, you will not calculate annual allowance for that asset that year. The asset don't qualify for capital allowance. So because they have disposed this asset, we will take the entire tax down value in that year, which is 825,000. Now the next one, they said they also disposed production plants. Production plant was disposed in that year. So production plants was 162,500. So instead of us calculating annual allowance on that one too, we will not calculate annual allowance on this. So we can go back to the question now so that we can finish the question. Now, how much was it disposed? If so, you remember when I was teaching you balancing charge, balancing allowance, I said balancing charge is a situation where your sales proceed will be greater than your tax in now value at disposal. Balancing allowance is a situation whereby your sales proceed is less than tax in now value at disposal. So if that is the case, what is my sales proceed for the first one? Office, furniture, and production plans. What is my sales proceed? Oh, yeah, give me my sales proceed on the question, please.
Office furniture is 250.
Alaja, thank you.
And the production plant is 650.
650. Thank you, Alaja. God bless you. So, tax now value at disposal. How much is our tax now value at disposal? The first one for office furniture, we have 825,000. For the other one, we have, oh, yeah, the other one we have 162,500. So, balancing allowance slash balancing charge. So, give me my variance. What's variance?
The first one is 575.
Balancing allowance for that one. The next one. The next one.
487,500.
That one is balancing charge. Now, you remember we said this is going to be treated as additional allowance, and this will be chargeable. But for you to charge this, you have to check something. Capital allowance, balancing check cannot be more than the total allowance claimed on the asset. So I would say restricted to total allowance claimed for sorry, Hawking. So we now want to check the total allowance claim on the asset disposed. Is it charging now? So what's the allowance claim on this plants? So what do? You will say to get total allowance, uh, to get total allowance claimed on the assets disposed. We will say total costs less tax residual value. So what's the total cost of production plants? What's the cost of production plants? Alaja, what's the cost of production plants?
1,820.
320.
1,820.
9, 8.
1,820.
I didn't hear that.
As in 1,820,000.
Okay. 1,820,000. Confirm, Alaja. I don't trust that. That number is not correct. For production plants,
Yes.
no, it's not possible. Okay. Bring the phone. Is it only Alaja that is in the class? What about every other person? I don't like all this that we'll be discussing something and you guys should not participate. It's not fair. Oh, wow. Mm. This is awesome. The cost of production plants. was 650,000. Alaja. So the cost you called for me here was the
Okay,
cost of.
I thought that is this. Okay, is it on disposal?
Oh, you guys are not following me, and this thing is paining me. What is the sales proceed
Please, can
for
somebody share the
production plant?
question?
Why will you tell me you don't have the question? Didn't we do it last class?
I didn't
Okay,
participate well last.
it's 650. I was thinking is the cost of.
I said give me sales proceed. You are giving the cost of acquisition. What is the sales proceed on all these assets?
So the production price is 350, you said.
In the production plant here, the cost of acquisition is 650,000, while the proceed is 600,000. The other one is 35,000. Now
Okay,
everything
yes.
I wrote here now is no longer valid. I just wasted my ink. So sales proceed for office furniture was 350,000. And tax union value at disposal. You called the value for me the other time. I updated it. How much was it? Call it again. This other one was 600,000.
So on our material, it's showing 35,000.
That was an error.
Okay.
So what do you have for tax union value at disposal? Let's do it right. Tax union at disposal. What is the value? That number you called for me the other time. This one, I think this one was
825.
8.
25.
Thank you, Alaja. The other one was 160 something, right?
162,
What
500.
Thank you. So this one will be what? What's my balancing allowance here?
for office furniture is 475,000.
Thank you.
Negative.
Balancing allowance. What about this?
437,500.
437. That is balancing charge. So we now want to check. So the cost of this acquisition was 650. And the cost of acquisition of this was 650. And balancing the total taxing down value at disposal of this asset was 16250. So what's the variance?
437,500.
No, it's not 437. 487
37500.
500. Abby?
Yes.
So we are saying that your balancing charge that you calculated cannot be more than the total allowance claimed on the asset. So the total allowance claimed on this asset is now more than the balancing charge. Therefore, our balancing charge will be 437,500. Assuming this was 300,000, then our balancing charge will be restricted to 300,000. But note, at every point in time, where your SP is less than your cost of acquisition, there is possibility that you will not restrict your balancing charge. You can see your cost of acquisition is 650, your SP is 600. So there is every possibility that you will not restrict your balancing charge because of that. So our balancing charge will be this, while our balancing allowance will be this. So the next one that we're supposed to do is to go and compute our company income tax. Computation. What's the name of this company?
Prado.
Eh?
Prado.
I can't hear. Okay, I said XYZ Limited.
Pardo Nigeria Limited.
Okay, thank you. Pardon, yeah. Computation of companies income tax for now. This company is just commencing operation, right? So we have profits for 2021 to 2025 year of assessment for 2021, 2025. So I'll do like this. When a company commences operation, the company will be assessed with tax from the date of commencement to the end of the first accounting year. Now, this company commenced 1/5, 1/3/2020 to 31/12/2020. That is the same profit we have in the question. Abby, the same period. So which is 7 million.
720.
7.2.
7.2.
7.2 million.
1.2 million. $7.2 million. Now there is capital allowance that we have calculated in the first year for the year. How much was that capital allowance? The one we calculated last week. How much was it? If you are writing notes, this thing will not be this difficult. And I've always told you, you need to write notes. This is just like a physical class. You need to always write the notes. What is the capital allowance we computed last week? What is the capital allowance? Oh,
Sir, please hold on. Let us call it up.
please be writing your notes in class. All this thing that you are doing is not advisable.
Yes.
I am begging you. If you are writing the notes last week, you just turn to the page and just pick it up. Now you are going back to the what if your phone crash or something happened to your this thing. Okay, well, I'm picking it myself.
450.
I'm not happy with you guys, so I can tell you that for sure. 450 was what we calculated.
450.
Relief for the year, we can relieve everything. Carry forward, nothing. 450. Total profits.
6,750,000.
It's not possible. Okay, 750. Okay, thank you. Now, company income tax at 30% of the total profits tertiary education tax at 3% of accessible profits. So give me 30% of that figure is what?
2,025,000.
Thank you. 2,250,000. This one, 3% of 7.2. What do you have?
202,500.
In the subsequent year, 2022, from 1/1/2021 to 31st 12/21, adjusted profit.
Hello,
So,
sir.
yes.
Hello, sir. Sorry, my hands have been up in a while. I don't know.
Okay.
Apologies for just unmuting.
No problem.
I just have a question or maybe a concern. And sorry, before I go into that, I just want to apologize for some of us due to the nature of our work. We are always in transit, probably when this class is going on. But we apologize for your efforts. You are actually doing a great job, sir. So that's why we might not really be echoing or moving in the same line of thought as you are, sir. And I also want to appreciate Haja, who is also standing in. Please, sir, just bear with us. So, but my question is regarding the investment allowance. I realized that we didn't capture that, despite us having motor vehicle as one of the assets that was purchased in Europe. I don't know why that happened, sir.
So investment allowance is no longer relevant. And I deliberately stopped calculating investment allowance because 2023 Finance Act had removed investment allowance. So in order not to confuse my students, I usually do not include investment allowance in my computation. Do you understand?
Okay, sir. So in exam scenario, we shouldn't include it, sir. We shouldn't include it as well.
Don't include it.
Okay.
Yeah. And I do not expect examiner to be setting question from 2020. The question they should be setting now is from 2023 and above. If they said that, just ignore it. The solution we are going to also provide will not include investment allowance. Do you understand me?
Yes, sir. Yes, sir. Understood, sir.
All right, my brother. Thank you for the encouragement. The next one, what are adjusted profits in this question? Adjusted profits.
10.7 million.
10 million.
700.
Capital allowance that will calculate the subsequent year. How much was that for the year? Because we don't have anyone that we are bringing forward. So, but how much for the year? The one we calculated last week.
It's 4,452,500.
4 million.
452,500.
Like this.
Yes.
Okay, good. Now we can take everything. Okay, so I'll say relief for the year. Assuming this company is a trading company with tests. It's probably a trading company or a manufacturing company. From the question.
It's a manufacturing company.
So we can take all the capital allowance. So I'll take everything without restriction.
We have
So
6,047,500.
okay, we now bring it to this side, my sister. We now say total profits.
247,500.
247,500.
500.
Thank you. On that, compose your company income tax at 30%. So what do you have?
We have 1,874,000.
No, it's not possible. 30% of this is what? You have 1 million what?
1,874,000.
Okay, 800. 874.
250.
Okay. On the profits, calculate 3% of your adjusted profits.
$321,000.
Okay. The next one, don't forget that in 2025 an asset was disposed. So we'll take that into consideration. Adjusted profit, what do you have?
12,650,000.
That is very sharp. Thank you. Capital allowance for the year, how much?
We have 1,921,250.
Okay. Relief for the year. You can relieve everything. Carry forward, nothing. So I'll come here 1,921,250.
And we
Total profit. Total profit, my
10,
sister.
10
Then
million 728,750 naira.
thank you. 30% of that.
We have 3,218,625 naira.
Company income tax. National education tax.
379,500.
Did you calculate it on this?
On the adjusted profit.
Okay, thank you. 2024.
We have 15 million.
Mm-hmm.
220,000.
Capital allowance for that year. How much?
1 million.
1 million.
Yes.
5,924.
590.
Call it again.
250.
Call it again.
1592. 250. Yes.
Relief for the year. Everything.
Everything.
Carry forward, nothing. Total profit.
13 million. 627,750.
Company income tax.
4,088,000.
4 million, abi?
4,088,325 naira.
88,000.
88, yes, 88.
Yes.
That is 088
Three.
325 325.
So, tertiary education tax at 3%. What do you have? Oh,
We
15.
have 456,600.
Now, in the last year, which is 2025,
Adjusted profit
what's our adjusted profit?
19,850,000.
19,850. Balancing charge. How much is our balancing charge? The one we just calculated today. We have 487,500.
Okay. Yes.
487,500. Capital allowance.
Allowance is 1,590,240.
15. No, you remember that in the last class I said we should back out the for production plants and furniture. We need to recalculate that. So that 159 that you have minus minus this from it, subtract 825 from it, and 162,500 from it. Do you understand what I'm saying?
Okay.
So this capital allowance for 2024. I want to confirm the amount. Is it 1592 or 1596,250?
Sorry. Okay. So from that, hold on, guys. From that 1,590,240, back out 412,500, and also back out 81,250, because for that year their capital allowance, we're not supposed to calculate the capital allowance on them. Do you understand what I'm saying? Let me say it again. In this year, the total allowance that we put in the solution was 1,590,240, and I am saying that we are not supposed to calculate capital allowance on furniture, which we mistakenly calculate 1,412,500. Subtract. We are not supposed to calculate capital allowance on plant, Abi, which is 8,125,500. Subtract. So whatever you have is our capital allowance for that period. Oh, yeah, give my value.
1,096,490.
1,064.
No, 1,096.
1,096. Sorry.
490.
96.
490.
Keep that number. We're going to use this here.
Okay. 1,096,499.
4.
90.
Okay, good. So Relief for the now before relief for the year, we have balancing allowance. How much is our balancing allowance for the year? You remember I told you it's an additional allowance. So balancing allowance is 475,000. 475,000. So what is my total allowance for this year now? So relief for the year, the addition of this and this. What do you have?
So this capital allowance for 2024, the figure is not correct, sir.
Okay, what is supposed to be the figure?
It's 1596 instead of 1592. 1596,250.
Elijah, are you following us?
Yes, sir.
Okay, you are not following. I said that's why we calculated this. I said in 2025, we are not supposed to calculate capital allowance on production plants and furniture. Abby? And we have gone ahead to calculate it. So that's why we said we should not have done that. Furniture. Is it furniture? Yes. Furniture and production plants. Because they were disposed. So the capital allowance that we had earlier calculated on it that gave us this 1590, we said is not correct. Recalculate it, remove the capital allowance for that year, which is for this production plant and furniture. So that's what we have tried to do here, to have our answer that will now take to this place. So when you add this two together, what do you have? That my sister that has been helping me since. What do you have?
157,490. 71,490.
Okay, this is relief for the year. Carry forward, nothing. So I'll bring that here. 1,571,490. Total profit. This plus this minus this. What do you have? What do you have?
Okay, I have been at 17 million. 791,010.
30% of that.
5,337,303.
53370. Tertiary education at 3% of the profits of adjusted profits of this one. Whatever you have, you put it.
500.
That's the end of the class. So that's the end of this question. Okay. The next one is capital allowance of a going concern company. Capital allowance for the going concern company. Now, what are we trying to say here? Now, company that has been in existence for so many years would also have assets they are also buying in a particular year. So when they buy the assets, or when you are given a question where the company has been existing, okay, that means they must have been using assets before that time. What is the treatment? Or when the company has just acquired an asset, what is the position of their law? What are you going to do in that regard? Imagine a company that has been in existence for so many years, and has been using an asset. So what the company will possibly give you for computation is your tax using now value. If they acquire new assets, it will be their costs. So a company that has been existing for so long would have what we call tax using now value will be given to you as the value of their assets. And if they just acquire the asset, they will give you cost. Now, where tax using now value is given, how do you calculate your annual allowance? When tax using now value is given, there won't be initial allowance, it's going to be only annual allowance. But how do you calculate the annual allowance for where tax now value is only given? So you have tax now value divided by n minus x. If cost is given for that year, I'm going to say cost minus initial allowance divided by n. Now that means if an asset is newly bought, you must compute annual allowance of the assets. If an asset is newly bought, you must compute annual allowance and initial allowance of the asset. If they've been using the asset for so long, the only thing you are computing on the assets is annual allowance. And in that regard, the examiner will tell you some things that will let you know that the asset has been used before now. So one of the things the examiner will tell you, they will tell you the number of years the assets had been put into production use. That means if they had used it, you need to look for the remaining years in which the assets had not been utilized. So take for example, for motor vehicle, the examiner says 3 years unexpired. When you hear 3 years unexpired, that means 3 years remaining. That also means 1 year gone. How do I know that 1 year has gone and 3 years is remaining? Firstly, you must know the number of years motor vehicle is supposed to use. Motor vehicle is supposed to use 4 years. So if the examiner tells you 3 years unexpired, that means 3 years remaining, 1 year gone. For building, let's say for example, if the examiner tells you for building now, examiner tells you 4 years gone, how many years left?
6 years.
6 years. That means this tax nominal value that you are given, what does that represent? We say tax nominal value n minus x. X is the number of years in which the assets so what this means is that is the number of years already used. And n is the total number of years, that is useful life of the assets. That is useful life of the assets. So that is what n means. So peradventure, examiner gives you, take for example, examiner tells you that building has a tax nominal value of 6 million and three years, or let's say 7 years gone. They just put it that way. So what does that mean? I'll just say, to get my annual allowance, I'll just say 6 million divided by 3. So that means annually, I'll be granting 2 million allowance because 7 years already gone, 3 years remaining. I'll just divide it by 3 years. Do you understand me? So examiner will always give you, they will give you like this, they'll give you a table. They can say building, they can say motor vehicle, they can say plants. They will give you tax nominal value. Let's say this one is 6 million, just like we have said. They will put remarks. In that remarks, they will tell you the number of years gone or remaining. So they will say, in this one, they say 7 years gone. This one, they put 7 million. They say 1 year remaining. They give you value of this one. They say 3 years unexpired. If they ask you to calculate the annual allowance, what do? All you need to do is to just look at them critically. The first one, they said 7 years gone. That means 3 years will be remaining. So my annual allowance for building will be 6 million divided by 3. I'll get 2 million. For motor vehicle, they said 7 years, 7 million, 1 year remaining. That means divided by 1. And we have 7 million as my annual allowance. The last one, plants, 8 million. They said 3 years unexpired. That means 3 years remaining. Divided by 3 years. Let's say this one is 9 million. So we have the 3 million. So do you understand how that one works? So that means you must know the number of years the assets will be put into use. You must know it. Okay? So that is that. Any question? Any question?
So I have a question, sir.
Okay, I'm with you.
Okay. You said you mentioned 2 conditions initially when we started the class. And I just want you to throw more light. When you say at disposal, when an asset is being disposed, the tax written down value is equal to disposal value, if I heard it correctly.
Yes.
Then second question is, you say no capital allowance is charged or is claimed on that asset for that year.
Yes.
Okay. So number one, if asset that so let's say a company has accounting year end of 30th September, and they have asset they've been using, but the asset is now disposed in let's say August 31st. That is having left before the accounting year end, and the asset is disposed. So are you saying that as at that 31st August, when we have 1 month left for the accounting year end, the asset is disposed, we won't claim allowance and any annual allowance on that asset?
Yes, that's what I'm saying, sir.
Okay. So secondly, you said tax written down value equals to
No,
down
no,
value.
no. You're not allowed me to throw light. You now say
Okay,
throw
sorry,
more
sorry,
lights. I will now throw
sorry.
more lights.
Okay, sorry.
I will now throw more lights. You remember when we started this class on capital allowance, I distinguish between the way you calculate your depreciation and the way we calculate capital allowance. Capital allowance is based on basis period. If I acquire an asset, even if it's on the last day of my basis period, that asset will enjoy full allowance. In depreciation, you will now prorate it, say it is depreciated for 1 day or thereabouts.
Okay.
In this regard, you don't do that. So if I acquire an asset on the last month of my accounting year end, provided that asset I acquired falls within that period, that basis period, then I am going to calculate annual allowance, initial allowance on that asset when I bought it. Now, if I dispose the asset on the last day of the basis period, I am not going to calculate annual allowance on that asset that I disposed. Okay? That is that. The next question. The next question. I'm waiting for you. Ask your next question. Okay, in the absence of no question, let's go to the next question in our pack. About trust this. Which page is capital allowance? 230 something. Sorry, which page is capital allowance again? Okay, I've seen it. I'm not sure I've seen it.
Hello, sorry, sir. Please, this motto under remark, what did you write? 1 year what, sir?
I said 1 year remaining.
Okay, thank you, sir.
So capital allowance is 236 on our pack.
Yeah, thank you.
Top six.
Oh yeah, let's look at question number 3. Question number 3. 242. Question number 3, 242. Yeah, let's go. You are given the following information on the residual of asset of Nengi Backness Nigeria Limited for the year ended 30/9/2005. So what the examiner gave us here is the residue, which is the same thing as tax now value, right? Which is the same thing as tax now value. So look at it. They gave us the residue.
Sir, what page is this illustration we're about to treat?
242, sir. Question number 3.
Page 242.
Yes.
Yes.
So you
Okay.
can see that they gave us motor vehicle and they put tax now value to be 1.8 million. And they said 2 more years. or 2 years more. What does that mean? That is, it remains 2 years. If I want to calculate annual allowance on that, what will I do? I'll just say 1.8 divided by 2. And now we have 900 annual allowance yearly before the expiration. The next one is plants. 1.2 million. They now told us 1 year gone. 1 year gone. How many years will be left for that? 1 year gone. How many years left for that plant? How many years left?
So is it 4 years?
Okay, thank you for asking. It is not 4 years. What is the total useful life of plants according to our schedule?
4 years.
Okay, 4 years. Abby, and now told us that 1 year gone.
Okay, so remaining 3 years.
So I'll divide it by 3. You see that it's simple.
Yeah.
The next one, furniture and fitting. Now, for the furniture and fitting, they told us 2 years remaining. That one is easy now. 2 years remaining. How many years has gone?
3 years.
Good, solid students. 3 years has gone. 2 years remaining. Divided by 2. What do you have?
340.
So that's annual allowance for that one. Now they now said for additions, they acquire some more. So the ones they acquired will be computed using this method. When you want to compute your annual allowance, you will use this method to compute your annual allowance. Abi? So now that we know this, the first thing I'm going to do to make this question easy for everyone is for us to do our assets allocation schedule. Now, for year 2006, year of assessment, they acquire some assets and they also give us tax now value. Abi? No. Okay, 2005. We'll start from 2005. What is the accounting year of this company? Okay. The accounting year of this company is 39 annually, and they've given us the tax now value and additional assets that was acquired within this period. So you were now told that motor vehicle 1, which is one of the motor vehicles, the first one here, was sold for 120,000 on 1/3/2026, and plant 1, which is the one on top, was sold for 800,000 on 1/10/2006. Furniture and cleaning was sold in parts, and they sold that one for 65,000. The tax now value of the proportion sold is 1/4 of the total. You are required to, you are informed that the furniture and fitting is in parts. So they now ask question. The question, and in the question, they now said, compute under which answer you refers to our asset as related party transaction. that is connected party transaction. So you have to know that. And number 2 now, they now said compute the capital allowance for the relevant year of assessment. Now, my asset schedule, you remember, I'll say tax year, basis period, and QC. Now, I'll start from the one that is acquired earlier. So the first one I was acquired was in 2005. You remember the basis period of this company is 30 annually. So this is 110. In fact, this will be okay. 110, 2003 to 39, 2004. Will these first assets fall into it? The answer is no. So I will take it to 2006. I will have 110, 2004 to 39, 2005. So the one I bought in 111, 2004. Oh, the one I bought in 111, 2004 will fall on that period, right? Page 242. This one I bought on 111.04 will be within this period, isn't it?
Yes, sir.
So I will introduce it on that year. So that is motor vehicle 2. The next one will be plants. Will that plant fall within this period? Yes, plant 2. Abina,
Yes.
plant 2 will fall in that period. If you look at it very well. The next one, furniture and fittings. Furniture and fittings, sorry, machinery. Will the machinery fall within this period? No. Abi? So let's go and look at the assets they said they brought forward. All those assets that they brought forward will fall within this period. That is, look at it though. Look at their year end. The year end of those assets is 30th 9, 2025. So they were all 4 years. So that means motor vehicle 1, plant 1, and furniture 1. All will be brought in the first year. In 2027 or 2007, 110.05 to 39.06. Which asset will fall in that period?
Machinery.
Machinery. Which other one? This 16.705. That is motor vehicle, furniture and fitting 2 will fall within this period, Abi.
Yes.
So second and furniture and fitting will fall in period 2, period 1. Now, disposal. Let's go to disposal. 110, 2006. Will it be here? No. So that means in 2018, 2008, 110, 06 to 3907. They said they disposed an asset on 1306. That will fall here. Which one did they dispose? Motor vehicle 1. Disposal. The next one, furniture and fitting was disposed. Furniture and fitting 1.
Plant 1 too was disposed.
When? It will fall here. 1106. 1106 will fall here. 1906 will fall here, which is furniture and fitting. Abi, 1. The plant that was disposed 110. Abi?
Yes, 1106.
Abi? So,
yes.
Now that we know, we'll now go and compute our capital allowance. Nengi. Computation of capital allowance for 2006 to 2008 year of assessments. How many assets? Don't merge them. Don't merge them together. We have 1, 2, 3, 4, 5, 6. About 6 of them or 7. Abi?
Yes, if I'm not merging.
7. If we are not merging. If you are merging, it will be a 4. But don't let us merge so that we can see clearly. 1, 2, 3, 4, 5, 6, 7. Capital allowance. What's the name of the first asset? Plant 2 or plant 1. Sorry, motor vehicle 1. The next one.
Plant 1.
The next one.
Furniture and fitting.
The next one.
Motor vehicle 2.
The next one.
2.
Is how?
Machinery, no? Next, machinery. Then furniture and fittings, second-hand furniture and fitting.
I think that's all right.
Yes, sir.
Yeah, it's supposed to be 7 now.
Sure. Well, motor vehicle 1, plant 2.
We have plant 2.
Motor vehicle 2, plant 2. Plant 2 is missing.
So capital. So QC with initial allowance and annual allowance. We know that for this to be 50%, 25%, 50, 25. Which ones? 25, 20. This one is 50, 25, 50, 25, 20. Are we? So we'll take it one after the other. Now, the first one, motor vehicle one, they told us we have done the calculation here, 2 years more. So the tax now value for those ones, did we acquire any asset this year? We did some acquisition. Abi? So the acquisition of the assets, we acquired motor vehicle one, plant one, furniture one, Abi. So all those ones that we acquired this year, we have to bring them in. So costs for the ones we acquired this year, costs. We acquired furniture motor vehicle two for 2 million. We acquired plant two, Abi.
1.8.
1.8. So this will not go up again. 1.8 million. Just be quite number for me. 1.8 million. Did we
The
acquire?
1.4 is for plants.
It's for plants. 1.8. Okay.
Machinery
Is how much?
2.9 for machinery.
2.9. Was he acquired this year or is acquired next year? So we are not bringing it in.
Oh.
Did we acquire furniture 2 this year? Yes.
Yes.
How much?
900,000.
What did they tell us about that furniture 2? They said it was acquired on second-hand basis.
Second-hand furniture and fitting.
Abi?
Yes.
What does that mean when an asset is acquired on second-hand basis?
There is no initial allowance for it.
Okay. Annual allowance should be what? Calculated on tax now value. Now, my assumption in this question is that these assets had not been used for business before. Therefore, we can calculate annual allowance on it and initial allowance because it not give us tax now value. So that means it has not been used for the purpose of generating tax before. So on that one, I'm going to calculate initial allowance on those ones. So yeah, give my initial allowance. This one will be 1 million. This should be 20% of 900. 180.
108.
50% of this 900.
900.
Add everything. What do you have?
Please, someone should be confirming. We have 2080,000.
Thank you. Annual allowance. Now, annual allowance for this guy was 900,000. But before that, we also have the actually have tax original value. Let's bring it in somewhere. Tax original value. Tax original value. I want to bring it up.
Hello, sir. Sorry for the stuff. This furniture of 32, I think it's 900,000.
900,000. Yes, I did not dispute that.
25,000, 25%. I say you
20,
still write 1 million.
25%. Oh, 25% of
25% is 225,000, sir.
okay. Two,
5.
225.
So this one will not be correct. Add
Yeah.
45,000 to this one. That would be 125,000. So I'm trying to bring in tax original value on this. So for the first one is 1.8 million, right? The tax original value of this guy was 1.8. Plants, we have 400, 1.2. I'll bring it in first. And the next one is 680. Abi?
Yes.
Not tax original value for this one. Okay. Now, and there's no cost for it. Annual allowance now is easy. So this one we have 900, Abi.
Yes.
What about this one? We calculated the other time. 400
100 and 340.
and 340. Now for this new one, we need to calculate their annual allowance. So that is 2 million minus 1 million divided by 4. That is 250,000. Abi,
Yeah.
this guy is 900 minus 225 divided by 5. What do you have?
We have 135,000.
135,000. It's not possible.
Yeah. You said divided by 5. It's supposed to be divided by, is it 4 or 5?
5, because this furniture and fitting uses 5 years.
Okay, so 900 minus 225 divided by 5. Yes.
Yeah, what do you have? Yes. So what do you have?
Someone should confirm. It's the 135 that I have.
You got 135. 135 is correct. What about this guy? 900 divided by 4. What do you have?
225.
225. So add all this together. This plus this plus this. Yeah, add this together. Get me the annual allowance.
We have 2,250,000. 2,250,000.
Okay. So the addition of the two. What do you have?
4,375,000.
So in 2026, starting now value for everybody now. This one will be 900, 800, 340, Abby. Give me
Yes,
this
this
one. 750.
750.
Hello, sir.
Yes.
Sorry, I'm not trying to draw it back. At least we had this first one, annual allowance. It's a written down value divided by the annual allowance percentage or by the number of the years.
By the number of years remaining, sir.
Yes, sir. So in this motor vehicle 118 divided by 4 years, supposed to be 450 now.
Mr. Hussein,
Yeah.
are you following the class?
Right. That's what I'm trying to get, sir. Sorry. Maybe I'm tired
Okay.
soon.
Sorry. I know it's not easy. So look at what we first did here. We said the motor vehicle already used 2 years. The entire number of years the motor vehicle is supposed to use is 4 years. But before now, they've used 2.
Yes. Oh, yes. Sorry, sir. I don't understand.
So,
Sorry, sir. Yeah.
okay. All right.
F and F2 is 540.
540.
40. Yes.
What about this one?
Okay.
How about this one?
675,000.
So let's go back to our table because there might be disposal this year. You can see there are 2 disposals this year. So, but before disposal, we have costs. We acquired machinery this year. How much was the machinery that was acquired?
2.9.
2.9. So on the machinery, we need to calculate the
Initial.
initial allowance. 50% of that, what will it be?
1,450.
Thank you.
1.4. Yes.
Abby.
Yes.
So that is the only one we have for that year. 1,450,000 that we acquired. Now, annual allowance. We have disposed motor vehicle 1 and furniture and fitting 1. What did I tell you? That principle that guy quoted the other time. I said, when there is disposal, what will happen?
We will not claim.
We will not claim annual allowance, and our taxing now value at that year will be equal to what? Disposal. So, disposal. No annual allowance. Disposal will be 900. So that it should now turn to 0. We also dispose this guy, Abby. Was that not it? We dispose, no, we dispose 451.
In part.
They said we dispose in part, Abby. 1/4 of it was disposed.
Yes, ma'am.
Abby.
Yes.
One quarter of it was disposed. So the meaning of that is that 1/4 of 340 is what?
85,000.
85,000 was disposed. The balance will be annual allowance. What's the difference between the two? Annual allowance, what's the difference?
So it will be 255,000.
Thank you. 255K. Talk now.
You say a difference, 255,000.
Okay. So you remember that we said this one still has 3 years to go. So I will have 400K as annual allowance, Abby.
Yes, sir.
So no disposal on this one. Let's go. Motor vehicle 2. Motor vehicle 2. Motor vehicle 2. What's the annual allowance? 250K. Machinery. What's the annual allowance? We need to calculate it. So 1,450 divided by 4.
Okay. 3,600 to 500.
36 to 500.
5.
Okay. For furniture and fitting, the annual allowance is constant, 135. And this one too, the annual allowance is constant, 22. So if you add everything together, you will have your answer there. So we'll move on to the next year. Taxing down value in the last year. This one should have gone. Nothing again, we have disposed it. This guy still remains 400. This one too has gone. This one will remain 500. Give me the balance for this one.
Okay.
So we have
Okay.
exceeded the time slot for this lecture. I think the time slot is 8 to 10.
I know.
Okay, machinery. That's
Where
We
is
have
your
15
next class?
minutes. We have
Where is your
15
next class?
minutes behind schedule.
When is your next class? When is your next class?
I don't know,
Okay, let's
but I know
continue.
the slot for this time. This lecture is supposed to be 8 to 10, so that we can
I'm
go and
not,
do some other things with our
I'm
time.
not arguing that. I'm not arguing that. Let's finish this question.
Machinery 1087 500.
1
087 500.
0 8 7 500.
F and F.
Yeah.
40,000.
The other one, what do you have?
F&F 405,000.
What was?
405,000.
What about this one?
Then 450,000.
Now, in this year, there was disposal. Abi, they disposed plants 1. So annual allowance, there is no acquisition this year. We will not give this guy anything, but annual allowance will be calculated for the ones that we have not disposed. 36254. Annual allowance for this guy 135,000. Annual allowance for this guy 225,000. Now, disposal 400K. We have disposed it. Nothing again. So you get your total allowance and we'll close it there. So the next thing that we're supposed to do is for us to do our balancing charge / allowance, if there is any. Now, they sold motor vehicle 1. Motor vehicle 1. What is it, motor vehicle 1? What's the sales proceed of motor vehicle 1?
120,000.
120K. What is the tagging down value at disposal? Tag 900. So we have balancing allowance, have we?
Yeah.
The next one, they sold
Plant
furniture and fitting.
1. Okay, furniture and fittings.
Furniture and fittings. This is not new. This furniture and fittings is not new. Okay, that's true. They sold furniture and fitting for how much?
In part for
How much?
55,000.
55.
Yes, sir.
Our taxi down value at disposal was 85. That's also balancing allowance. The next one,
Plant
the
1.
plant 1. How much they sell it? Plant 1.
800.
How much?
800,000.
What's our taxi down value at disposal?
800,000 naira was sold.
800,000 was sold. 800K. So what is our
400.
disposal? 400. That's balancing charge. Abby,
Yeah.
this is 400 balancing charge. This is 30K balancing allowance. This is 780 balancing allowance, balancing allowance, balancing allowance, balance.
Balancing charge.
So that's the end of the question. Another principle that I need to tell you, because today is the last day we are doing this topic, is carry backward of capital allowance upon cessation. Any unutilized capital allowance upon cessation can be carried backward for a maximum period of 5 years before cessation. So when a company ceases operation and they have capital allowance that they've not recouped, the Act says they can carry backward for a maximum period of 5 years. Okay, so that is that for this class. In my next class with you, we shall be looking at companies' income tax. Companies' income tax. And that will take us a minimum of 3 to 4 weeks to conclude that topic. Because there are a lot of things that we're going to be discussing under that. Good day to you, and God bless you. Till we meet again next week. Thank you.
Thank